Ever feel a bit lost trying to navigate the investment world? You hear about diversification, but making it happen seems complicated, right?
It can feel that way. But what if there was a tool sort of designed to simplify that?
Exactly. Something that offers broad exposure, but, in a more straightforward package.
Well, that's precisely what we're diving into today.
Yep.
We're talking exchange-traded funds, ETFs for short.
Right.
Think of them almost like a pre-packaged bundle of investments. You get stocks, bonds, maybe even commodities, all wrapped up together.
A ready-made collection, basically. And the cool part, which you mentioned, is that you trade this whole bundle just like a single stock.
On the stock exchange.
Yeah.
During trading hours.
So our mission today in this deep dive is really to unpack ETFs, why they're so flexible, why they're accessible, and how they can help you build that diversified portfolio.
Definitely. Welcome, everyone, to My Nudge Finance.
Okay, so we said bundle. Let's dig a bit deeper. What exactly is going on inside an ETF?
Sure. So at its heart, it's a fund, right? It holds a collection of assets. Could be hundreds of different company stocks.
Okay.
Or various types of bonds, government, corporate, sometimes a mix of asset classes altogether.
So lots of different things, potentially.
Exactly. And the key is, when you buy just one share of that ETF,
Yeah.
you're effectively getting a tiny piece of all those underlying holdings.
Ah, okay. So you get that breadth immediately. And you mentioned trading like a stock.
Yep. They trade on major stock exchanges. So unlike some older types of funds, you can buy or sell them pretty much any time the market's open at whatever the current market price is. That offers a lot of flexibility.
Flexibility, got it. And that structure naturally leads to one of the biggest selling points, doesn't it?
Yeah.
Diversification.
Absolutely. That's like fundamental to the whole idea. The sources we looked at really hammer this home.
So let's talk about why you, listening, should care about diversification. I mean, if you're just starting out, picking individual winners feels daunting, right?
Oh, completely.
Yeah.
It's tough. And if the few stocks you pick happen to stumble, well, your whole investment could really suffer.
Right. High risk there.
ETFs tackle this head on because your money is spread across maybe dozens or even hundreds of different assets within that one ETF. The poor performance of one or two isn't going to sink the ship, so to speak. The impact gets diluted.
So it smooths things out a bit, less reliance on picking that one magic stock.
Precisely. It's about reducing that concentration risk.
Yeah.
You get broad market exposure, often with just one transaction.
No.
It's diversification made, well, easier.
And easier often comes with another perk, cost effectiveness. Is that generally true for ETFs?
Yeah, that's another big one. Generally speaking, ETFs tend to have lower expense ratios compared to, say, many traditional actively managed mutual funds.
Expense ratios. Those are the fees, right? The cost of running the fund.
Exactly. It's the annual fee expressed as a percentage of your investment and lower fees. That directly means more of your potential returns actually stay in your pocket.
Okay, that makes a huge difference over time, I bet.
It really can compound. It's a very tangible benefit.
So diversification, potentially lower costs. Compelling stuff. What about getting your money in and out? You mentioned treating like a stock.
Right, that's the liquidity aspect, because they trade actively on exchanges all day.
Yeah.
ETFs are generally very liquid, meaning it's usually quite easy to buy or sell shares quickly during market hours at the prevailing market price.
So no waiting till the end of the day to trade, like with some other funds.
Correct. That intraday trading capability is a key feature. Gives you more control.
Okay, easy in, easy out, relatively speaking. What about knowing what you actually own? Is it like a black box?
Actually, no, quite the opposite usually. That's the transparency benefit. Most ETF providers are pretty open about their holdings. They typically publish the full list of what's inside the ETF every single day.
Oh, really? Daily?
So you can go online, look up your ETF, and see exactly which stocks, bonds, or whatever else it holds at that moment.
So you have a clear picture of your exposure. That seems important for, understanding your own portfolio.
Definitely. It helps you make informed decisions.
All right, this paints a pretty positive picture. So someone's listening, they're interested. How do they actually, get started investing in ETFs? What are the first steps?
It's actually quite accessible these days. Step one is you'll need a brokerage account.
Okay, like from one of the big online brokers.
Exactly. Think platforms like Vanguard, Fidelity, Charles Schwab, Robinhood. There are many options. You open an account with one of them. That's your gateway.
Got it. Account open, then what?
Then comes the slightly more involved part, choosing the right ETFs for you.
Right, because there must be thousands of them out there.
Oh, yeah. Loads, they cover everything imaginable, so you need to think about your goals. What kind of exposure are you looking for?
Like, do I want U.S. stocks or international? Or bonds? Or maybe just a specific sector like tech?
Precisely. You can find ETFs that track broad market indexes like the S&P 500, which gives you a slice of 500 large U.S. companies. That's a common starting point.
Okay, a broad index fund.
Or you could get more specific. Sector ETFs for tech, healthcare, energy, you name it. Bond ETFs for fixed income. International ETFs for global exposure. Even commodity ETFs.
So lots of choices to align with what you want to invest in.
Right, so you do some research, figure out which types of ETFs match your investment strategy, and, importantly, your comfort level with risk.
Risk tolerance. Okay. And once you've picked one, or maybe a few.
Then it's simple. You just log into your brokerage account and buy shares of that ETF, just like you'd buy shares of Apple or Google. Put in the ticker symbol, how many shares you want, and place the order.
So the buying mechanism is familiar if you've ever bought a stock, but you mentioned research that sounds crucial.
Absolutely crucial. Don't just pick one because the name sounds good.
Right.
Understand what it holds. What index does it track, if any? What are its top holdings? What's its expense ratio? Does its objective truly align with your financial goals?
So do your homework before clicking buy.
Always. Even with diversified products like ETFs, understanding the specifics matters.
Okay, that's a good roadmap. Now, thinking about strategy, any sort of smart moves or tips for people incorporating ETFs?
Yeah, a few general pointers often come up. First, especially if you're starting out, consider starting broad.
Like those broad market index ETFs we mentioned.
Exactly. Something tracking the S&P 500 or maybe a total stock market index. It gives you instant wide diversification without having to overthink it too much initially.
Makes sense. Keep it simple at first. What else?
Think about your time horizon. Are you investing for retirement decades away or maybe something shorter term?
Okay.
ETFs can work for both. You can use broad index ETFs for long-term buy and hold strategies, or you might use more specific sector ETFs for shorter-term tactical adjustments. Just be clear on your goal.
Match the tool to the job, essentially.
You got it. And finally, stay informed. Investing isn't really a set and forget it's thing entirely.
Meaning,
check in on your ETFs periodically. See how they're performing relative to their benchmarks and your expectations. Market conditions change, your own financial situation might change.
So you might need to make adjustments over time, rebalance maybe.
Potentially, yes. Reevaluate if your holdings still make sense for your goals. It's about ongoing management, even if it's light touch.
Right. Okay, so let's recap the main points for everyone listening. The big takeaway seems to be that ETFs are, well, a really flexible tool.
Flexible, generally cost-effective, and they offer an accessible way to get diversification.
You get exposure to a whole range of assets, stocks, bonds, whatever, through just one investment that trades easily on an exchange.
Exactly. Understanding those core benefits, the diversification, the potential cost savings, the liquidity, the transparency, really shows why they become such a popular building block for portfolios.
So hopefully understanding this helps you feel more empowered. By thoughtfully using ETFs, you can take a really significant step toward whatever your financial goals might be.
Absolutely. It's a powerful tool in the investor's toolkit.
And speaking of building portfolios, on our next Mind Nudge Finance Deep Dive, we'll actually get into some specific strategies for doing just that, building a diversified portfolio, using ETFs, and maybe some other tools as well.
Which leads us to a good final thought for you to ponder until then. Now that you have a clearer picture of what ETFs are and what they offer, what specific investment goals, big or small, could this versatile tool potentially help you achieve?